Risk. It's an issue that both buyers and sellers of companies face through a merger and acquisition deal, and for years thereafter, well after the ink is dry on that contract of sale. Both parties attempt to hedge their risk through due diligence, contract negotiations, and collateralizing a portion of the deal, but the threat and cost of litigation still exist. So, how do you transfer those potential risks off to a third party? Through the use of reps and warranties insurance. Hi, I'm Gordon Coyle. Welcome back to my channel where we talk about risk and insurance issues on the minds of business owners. And in this video, we're going to talk about reps and warranty insurance focused on small business deals where deal values are $30 million in enterprise value and below. So let's start off briefly and talk about what reps and warranties are from a contract standpoint in an M&A deal. The seller of a company will make certain representations about the condition of the company they're selling. There could be 10, 20, 30, 50 or more statements of fact made in this portion of the sales agreement that the buyer will rely upon as being true and factual. These statements or representations help validate the value of the company that the buyer is willing to pay for. The seller, also in the contract of sale, agrees to indemnify the buyer if the representations turn out not to be true. It is this indemnification where the risk for the seller arises. An indemnification is a promise to make good on your statements and pay the buyer for the damages they may suffer as a result of the seller's inaccuracies. The potential litigation from an irate buyer can be extremely expensive to defend against and pay for. What's worse is that this indemnification period that sellers are responsible for is typically 6 years. Now, imagine being a seller. You've exited a business, and 4 years later, you're sued due to an innocent misrepresentation. That can be unnerving and be a cause for a lot of worry for the seller. The buyer tries to hedge the risk of loss from misrepresentations by holding back 10 to 20% of the deal proceeds as collateral for up to 2 years. But this escrow has limitations. First, it only hedges the top 10 or 20% of the deal, and there's potentially much more risk here that's not covered by the collateral. Second, the escrow is only enforced for 2 years, while the indemnity period lasts for 6 years. And the value of the funds held in escrow deflate. They're less valuable down the road than they are today. On top of that, the seller doesn't like any portion of the proceeds to be held back or put any proceeds at risk. And this can slow down contract negotiations. So, how can reps or warranty insurance help reduce friction and risk and get the deal done while protecting both the parties? Here's how. Let's start with the seller. They face having a portion of their proceeds tied up for 2 years as collateral, as well as the potential liability for the entire deal's value should litigation ensue. The unknowns can make negotiations difficult for the seller. R&W Insurance can help eliminate most or all of the collateral requirements. More importantly, it stands behind the seller to respond to claims and pay for litigation and settlements for covered acts. For the buyer, especially in the lower middle market, diligence only goes so far. Buyers are concerned that their investment in an acquired company may not perform or pan out the way they planned due to a misrepresentation, and they really don't want to have to litigate over potential misunderstandings. So, how does R&W Insurance work? R&W Insurance covers the innocent misrepresentations and the resulting fallout from a misrep, loss of income, decrease in value, etc. The policy, of course, is not going to pay for frauds or outright lies. Ultimately, the policy provides peace of mind for both parties should a claim occur. Insurance steps in to smooth out the problem. R&W Insurance goes way beyond just holding back escrow. Sellers want to walk away from the closing table with all their proceeds in hand to retire, start another business, or invest. They don't want the buyer holding onto their funds with no ROI. Here's an actual claim example to demonstrate the policy in action. A successful Mexican restaurant chain in Texas sold their business to a regional restaurant group, and soon after that closing, the buyer was notified that various equipment leases were not disclosed in the sales agreement, resulting in $50,000 in damages for the buyer. On top of that, the seller was not aware that the state labor department was conducting an investigation prior to the sale. After the sale, a $409,000 fine was levied upon the business and its new owners for certain employment law violations. As you can imagine, the buyer wasn't too happy getting stuck with these two additional costs and filed a claim with our insurance company. Both issues were resolved under the policy, resulting in over $500,000 being paid out in costs. Without this insurance, the seller would have had a substantial loss to pay out of their own pocket and to defend on their own. If you're an M&A advisor, why would you recommend reps and warranty insurance? First, most business owners don't even know that this coverage exists. So by recommending it, you're giving them access to greater peace of mind, less friction, and, in my opinion, better results. On top of that, insurance often makes good economic sense over collateral holdbacks. There's a reason why the majority of private equity deals deploy reps and warranty insurance, but now it's available in the small business market. To obtain a fast, non-binding premium indication, you can go to this page on my website, or you can follow the link in the description box below. This is a short 10-question questionnaire form that only takes about 2 minutes to complete. Once I get it, I'll send it to our underwriters to obtain pricing indications for you, and this usually takes 3 days or less. If you'd like to pursue coverage, we'll then need additional info to complete the underwriting and firm up the pricing, which can also be done in another 3 or 4 days. So it's pretty fast and it's pretty economical. Have other questions on R&W insurance in the small business market? Let me know. My contact info is in the description box below, and I'd love to hear from you. Thanks.